Brad Williams, Frugal Finance, Self-Directed IRAs. Is a self-directed real estate IRA a smart choice for your retirement? In recent years, individual real estate investments have seen significant growth, with many opting for vehicles like real estate investment trusts, REITs, and real estate mutual funds. However, the rise of self-directed IRAs is beginning to shift the landscape. These accounts not only allow but also encourage direct real estate investments, offering an appealing opportunity for those looking to diversify their retirement portfolios while benefiting from real estate's potential for long-term returns and protection against inflation. A self-directed IRA provides more flexibility than traditional retirement accounts, allowing investors to use their funds in a broader range of assets, including real estate. This includes not only property investments, but also mortgages, private placements, and various non-traditional assets. The Internal Revenue Code Section 408 permits real estate purchases with IRA funds, making this an increasingly attractive option for those seeking to enhance their retirement strategy with tangible assets like property. Key points to know: self-directed IRAs allow for tax-deferred growth on earnings. The account owner manages the IRA directly without relying on financial institutions. Investment options go beyond stocks and bonds, including non-traditional assets like real estate. Understanding self-directed IRAs? A self-directed IRA differs from traditional IRAs by giving account owners full control over their investments. Instead of relying on financial institutions to make decisions, the individual decides where to allocate funds. While this includes typical investments like stocks and bonds, it also opens the door to alternative options such as real estate. For an IRA to be considered self-directed, it must be held with a qualified custodian or trustee, which handles administrative tasks like record keeping, IRS reporting, and ensuring that all regulations are followed. These custodians ensure that the IRA is compliant with IRS rules, such as contribution limits, distribution requirements, and penalties for early withdrawals. Investment options for self-directed IRAs? The range of investments for self-directed IRAs is significantly broader than that of conventional IRAs. In addition to the usual stocks and bonds, these IRAs can include alternative assets like real estate. However, not every custodian offers the same range of investments, so it's essential to confirm with the custodian that they facilitate the types of assets you wish to invest in. Some common real estate-related investments allowed within a self-directed IRA include residential and commercial property, land, both developed and undeveloped, real estate investment vehicles like limited liability companies and partnerships, mortgages, both secured and unsecured, private stocks and public equity investments, tax liens, notes, and structured settlements. This flexibility enables investors to tailor their retirement portfolios with a variety of assets that offer potential for income and growth. However, it's important to remember that while many investments are permissible under the IRS code, there are restrictions on certain types of assets. What you can't invest in? There are specific assets prohibited by the IRS within self-directed IRAs. For instance, life insurance policies cannot be purchased, and investments that create conflict of interest, such as buying property for personal use or property owned by close family members, are also disallowed. Investors are responsible for ensuring that their investments comply with IRS regulations. Custodians typically do not offer legal or tax advice, so seeking the counsel of a tax or legal professional is highly recommended when using a self-directed IRA. Rules for property investment? Self-directed IRAs allow direct investments in real estate, but it's critical to avoid self-dealing. This means you cannot use IRA funds to purchase property for your personal residence or business. Additionally, transactions involving the IRA buying or selling property to the account holder or certain family members are prohibited. The goal is to prevent any situation where the IRA's assets benefit the account holders directly. Managing your real estate IRA? Once your custodian processes the necessary paperwork, the title to the property purchased through the IRA will be held in the name of the custodian. Any expenses related to the property, such as maintenance, must be paid through the IRA, which requires having enough cash within the account. In cases where the property is financed through debt, income generated may be subject to unrelated business taxable income, a tax applied to earnings from debt-financed assets. Before committing to debt-financed real estate investments, it is wise to consult with a tax advisor to fully understand the potential tax implications. Checkbook control for more flexibility. For those seeking more direct control over the IRA's investments, checkbook control is an option. This setup allows account owners to write checks directly from the IRA to fund investments, usually through an LLC owned by the IRA. This can be especially beneficial for tax-sensitive real estate transactions like foreclosures, where the ability to act quickly is essential. Checkbook control offers a higher degree of autonomy and can reduce custodial fees, but it also requires more responsibility in managing the IRA's assets. It's important to ensure that the IRA has sufficient funds to cover any property-related expenses, as using personal funds for IRA investments can jeopardize the account's tax benefits. Real estate and retirement planning. Real estate has long been a proven asset class, often generates substantial wealth for those who understand the risks and rewards involved. By incorporating real estate into a self-directed IRA, investors can take advantage of the asset's potential for both capital appreciation and income generation while enjoying the tax advantages of traditional retirement accounts. Conclusion: self-directed IRAs offer an exciting opportunity for retirement planning, allowing the individuals to invest directly in real estate and other non-traditional assets. Whether through direct property investments or other real estate-related vehicles, this flexibility provides a way to diversify a retirement portfolio. However, investors should be aware of the associated regulations and take steps to ensure compliance. With proper planning and a clear understanding of the rules, a self-directed real estate IRA can be a powerful tool for securing retirement income. These are complex tools. If you mess up, the IRS is going to penalize you severely. So take it very serious if you're thinking about a self-directed IRA. Understand all the workings and hire a tax professional and a legal expert that specializes in self-directed IRAs. If you have any questions about self-directed IRAs, comment. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.